Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to consider the Morgan Stanley's turning from the bullish phase to now seemingly in the bear grip. We are going to look at the factors which have contributed to the stall in the bullish momentum of the Morgan Stanley's share price and the subsequent turning in its recent trading session, particularly after the release of its quarterly earnings, the fourth quarter of 2023's earnings. We have seen sharp decline on the lower side. On fundamental side, these are the contributing factors which we will consider, mainly the lower than expected net profit. And on the revenue front has not changed much. It is slightly higher, but there is no significant growth. And I think the key factor which is weighing on the investors sentiment, investors mind, is that despite the benefit of higher interest, the Morgan Stanley wasn't really able to generate as much profit as would have been liked by the investors. And in the subsequent quarters, in the coming quarters, the situation is likely to change as there is a expectation of the rate cuts by the Federal Reserve that will entail lower interest income, and of course that is going to contribute to lower income projections for the coming quarters as well, unless bank is able to devise new revenue sources. Its investment management unit is not showing much growth. The silver lining was the good performance by its wealth management unit, which indeed did well with this growth, but other key segments of the banks are not really contributing much to the growth story, and that is also one key reason why the Morgan Stanley is lagging, is seemingly on the back foot in comparison to other major peers like JP Morgan and Wells Fargo, which we considered earlier in this series. So let us now hit the quarterly statement. Here you can look at the highlights of the fourth quarter's earnings. This is a publicly available document of the Morgan Stanley's fourth quarter earnings. You can see that for the fourth quarter, the revenues were at US dollar 12.9 billion, which is slightly higher year on year. And if we look at the earning per share and the net profit, it is lower than the prior year because the company has experienced shrinkage in its operating margin, and also the tax outflow was also on the higher side. So all these factors have contributed to the net income declining year on year, even though the revenue is slightly higher year on year. In terms of the quarter on quarter, there is not much of a change. Also, we have the figures for full year, which we will not dwell into much. But here also, if you consider, there is growth in the net revenues, only slightly 500 million growth is there for the whole year, and the net income stood at US dollar 9.1 billion in comparison to the higher income of prior year when it stood at US dollar 11.029. So in this year, the bank's efficiency has reduced, its operating cost has gone up, and even though there is not much of a decline in the revenue, there is slight increase, or you can say the revenues have been more or less flat. There is shrinkage of the earnings, and that seemingly points to the operational inefficiencies and the higher cost of running its banking unit. Also, there were some reasons like provisions for the losses and one-time charges like the FDIC imposed charge. So all these factors are contributing to the lower net income despite flat to positive revenue growth. Now we straight away go to the income statement, consolidated income statement, which is on the 11th page of this document. If you look at the revenues in comparison of quarter on quarter as well as year on year, you will see that the net revenues have declined quarter on quarter, but these are slightly higher year on year, 1% growth year on year, whereas 3% declined quarter on quarter. For a 12-month period, the revenues are up 1 percentage point, and then comes the expenses have gone up significantly for many of the things, many of the contributing factors like marketing and business development, the occupancy and equipment has actually seen decline, and as a result of that, the non-interest expenses have gone up both quarter on quarter as well as year on year, and that has significantly impacted the net income, which has declined 37% quarter on quarter and 32% year on year. So, this quarter has been particularly worrisome because even though there is profit, there is shrinkage of the profit, and any firm would be concerned about the factors which led to decline in its net income. Apart from the one-time FDIC charge, I think other factors are going to be sticky to get rid of, and the bank's management, the Morgan Stanley's management, will have to look into the contributing factors and see if there are ways to bring in the operational efficiency and reduced the cost of running the bank, running the business. And then comes the EPS, the earning per share, which is also 38% lower quarter on quarter and 33% lower year on year. But in annual terms, the decline is less severe, with the EPS for a whole year being 16% lower in comparison to the prior year. So both in quarterly net profit and EPS as well as in annual net profit and EPS, there is decline, and that is also the reason why we are seeing this sharp decline and continuous bearish undertone in the Morgan Stanley's share price since the release of its quarterly earnings. It was trading close to 90 just prior to its earnings release, and since the quarterly report came in, it has declined. First, it opened lower, and then that bearish momentum continued. And even in today's session, it is in bear grip with this slight consolidation with bearish undertone unfolding close to the US dollar 84 per share price zone. And I'm also of the view that after due consolidation, if it doesn't really rise past the prior closing price, the price just before the release of its quarterly earnings, I think we will have to take the bearish outlook, bearish sentiments in mind, and keep looking for the opportunities to short sell the Morgan Stanley's shares over the coming sessions, coming weeks. So for us, the key price zone is going to be simply this price area in which the price was consolidating prior to the release of this earnings report, and there is also this gap which is not being filled as of yet, and it shouldn't really be filled if we expect the consolidation to continue and a fresh move on the lower side. So watch out for the price action over next couple of sessions. And if it doesn't really start rising again and continues to consolidate while holding below these immediate closing price prior to the earnings release, I feel we have good chances, favorable risk reward ratio coming our way, that we will be able to capitalize on these bearish sentiments and take newer trade positions with the expectation of further decline towards a price zone of US dollar 80 per share. So that is a possibility which we can exploit if it comes to pass. Now turning to the medium term perspective, medium term time horizon, we have this momentum in the Morgan Stanley shares, which is a bit confusing because we can't really say that it has totally turned bearish from the medium term perspective, because it was rising for last 2 months, and since the turn of the calendar it has started to decline again. But whether it is a retracement or whether this is a full-fledged reversal from the bullish side to the bearish side, we will have to allow more time for the clarity to emerge. There is a train passing by. I have railway tracks next to my house, and because of that, you are hearing this voice, this horn sound. Now, coming back to our charting, here we don't really have much clarity from the medium term time horizon. It was in extended consolidation for the first half of this fiscal year 2023, and then it again dipped on the lower side, just little below US$70 per share. But from there on, again it rallied almost 30 percentage point before it started to dip again. Now, for us to gain clarity, we need to allow more time for the share price of the Morgan Stanley to spend more time closer to these median of the ongoing range. And if it doesn't really give us much clarity, I think it will be better for us to avoid taking any new trade positions from the medium term perspective, because we don't really have that clarity here. In the short term, it is in the bearish zone, but we will have to wait it out for better risk reward ratio. On the weekly front, it seems to be changing from bullish to bearish. It has been making lower lows and lower highs for a while now. After having peaked close to US dollar 110, the Morgan Stanley stock has reversed course, and it has been making lower lows and lower highs for last couple of quarters. So even in this quarter, after having gone close to 94 level, it has started to decline again. So if it continues this bearish momentum and there is not much of a surge beyond price levels of 100, we can indeed go for newer short selling opportunities with the expectation of the further decline towards 70 or even beyond that. So that possibility is seemingly possible. Seemingly, that is the outlook, which is now tilted clearly in favor of bears, with the opportunity to short sell with good risk reward ratio. So watch out for the price action over next couple of weeks, and maybe by then you will have further clarity if it doesn't really rise back sharply on the higher side, and if it dips towards 80, below 80, and then consolidates, I think we can indeed initiate the long term trade to go for a short sale and expect the Morgan Stanley stock to eventually dip even below these immediate swing low of $70 per share. So that's my outlook looking at the current price trajectory of the Morgan Stanley in all the three key time horizons of short term, medium term, and long term, where it is in seemingly bear grip in the short run and the long run, but the things are not that clear. There is ambiguity on the medium term time horizon, and in such a scenario, we will do well to simply sit on the sidelines and allow the clarity to emerge. So that's all from my side for today's session. And if you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. Now I am signing off for the day. There is a subscription button and of course the like button, which you can click if you have found this information regarding the fundamental and technical prospects of the Morgan Stanley useful for making the investment and trading decisions for yourself. And do let me know in the feedback if there is any query regarding the outlook, and I would be more than happy to have a discussion with you. Now it's time to sign off. Thank you all for joining in. Have a fabulous day ahead. Do come back next time around tomorrow. Till then, goodbye. Good day.